Hey everybody, Mike here with Tactical Income Investing. Today's video, we are going to talk about what can stop this AI boom. And I don't know if that's the right question. Everybody's talking about whether the AI boom is over. Is it overpriced? What's going on with it? But I think that's the wrong question. The better question is what can slow down the AI boom? AI isn't made of just chips. It's made of power. It needs cooling and memory. It needs networking. It needs data centers, real world infrastructure. And in this video, this is what I'm going to be going over. I'm going to be going over the picks and shovels and some of the bigger players here and some of the smaller players with regards to the AI boom. So sit back, take screenshots. There's a lot of really good information here that I built, and I think you'll enjoy it. So, without further ado, here's your video.
Just a quick reminder before we begin, this video is for educational and informational purposes only. This is not financial advice. Anytime you're dealing with investing or options, make sure you do your own research and make your own decisions. Let me be clear right up front. I am not saying AI is fake. I'm not saying the boom is dead. I think AI is real. I invest in it. But real businesses still have real world limits. And that's where investors need to pay attention. AI does not scale on chips alone. It needs electricity, cooling, memory, networking, data centers, and it needs electrical infrastructure. The next phase may not be decided only by who has the best AI model or or anything like that. It may be decided by who can actually support the infrastructure needed to run it. This is the way I'm thinking about the AI boom. So at the top, you have AI applications, the tools, software, the services people usually or actually use. But underneath that, you need chips and memory, and those chips and servers need networking. They need data centers. Those centers need a grid. All the equipment has to be kept cool. So when people ask, who wins I don't only want to look at the obvious names. I want to look at the bottlenecks because a lot of times the real picks and shovel opportunities show up where bottlenecks are. The first bottleneck is power demand. So AI data centers need a massive amount of reliable electricity 24/7. And the issue is not whether electricity exists somewhere. The issue is whether it can be delivered to the right place at the right time with enough capacity. So the generation, the transmission, grid access, permitting, all these things matter. And the power availability can influence where AI capacity actually gets built. So in this part of the stack, I'm watching names like Constellation Energy, Vistra, Eaton, GE Vernova, Quanta Services, and AIPO as like a broader ETF basket. These are not buy recommendations. These are research names tied to the power bottleneck. It's the companies that I'm looking at for potential plays, and some of them I am in, but these are the power bottleneck names. The second bottleneck is cooling and water. And this is where the idea for this video started. The more AI compute you pack into a data center, the denser those servers become. The denser the servers become, the more heat they create. And the more heat they create, the more important cooling becomes. That brings thermal management, liquid cooling, airflow, water usage, and data center design into the investment conversation. This is why Vertiv is one of the main companies on my radar right now. It's not the flashiest AI company, but it sits very close to a real problem. How do you keep these data centers powered, cooled, and running? So this is where Vertiv matters to me. It sits near one of the clearest picks and shovel layers of the AI stack because without power and cooling infrastructure, the chips don't even matter. You can have the most advanced GPUs in the world, but if you can't power them or cool them or keep the data centers running, the system just breaks down. Now, that doesn't mean Vertiv is automatically cheap or anything like that. This is where you need to do your own due diligence, but it does mean that it doesn't mean that you blindly chase this stock. But from the theme perspective, this is exactly the kind of company I want to understand as AI moves from that hype into like actual physical infrastructure. The third bottleneck is memory, and I think this is one of the more underappreciated parts of the AI story. AI is not a GPU story. AI workloads need memory bandwidth, they need storage, they need high performance DRAM, that's DRAM. They need the piece that allows these systems to actually process and move information efficiently. This is why Micron and the DRAM ETF are on my radar. Memory sits directly inside the AI infrastructure stack. And if memory becomes tight, expensive, or strategically important, that could create both an opportunity and a big risk for investors. So DRAM deserves its own section here because memory can be a powerful AI theme. But I want to be careful here. Memory is not risk-free. This is a cyclical industry. So pricing, supply, and demand all matter when you think about this. So if AI demand keeps driving high performance memory needs, then that can support the bull case. But if supply catches up too quickly or memory pricing rolls over, this trade can get dangerous. So my simple view, DRAM is worth researching. It may be a powerful theme, but it's not worth something I blindly chase without understanding the cycle. So in my personal view, I think the cyclical nature of these memory stocks, in particular with DRAM being the ETF that kind of holds all of these big companies together, where you don't have to guess. But the cyclical nature of these companies, I think, at least temporarily until probably 27, 28, it's possible it can go further. I think that cyclical nature of this theme slows down a little bit because the demand is so real that I really feel that this can be built out over time. And with DRAM as the ETF that I'm choosing to look at, you don't have to pick the actual winning stock because you're picking the whole theme. The fourth bottleneck is networking and data movement. So the AI systems get bigger, the chips and servers need to communicate with each other at extremely high speed. That makes networking a major part of this AI build out. This is not always the first layer retail investors think about, but if you're building a massive AI cluster, right, and the network matters, the high speed switching matters, the connectivity matters, and moving data efficiently matters. So that's why Arista Networks and Broadcom are the two names that I'm watching in this part of the stack. Again, not automatic buys, but as companies tied to an important bottleneck. Yes, I am invested in both of these companies, but it was something that I feel that we're in such an early stage here that these got plenty of room to go. Always do your own due diligence, obviously. Do your own research, but these are the two companies I feel are well positioned in the networking and data movement bottleneck. The fifth bottleneck is the physical build out. So this is where AI stops being just a software story. Data centers have to be built, power systems have to be installed, The cooling systems have to be designed, transformers, switchgear, grid connectors, backup power, permits, construction, all of that matters. And this is where the AI story becomes an infrastructure story, right? That this is like the bigger point of the whole video, honestly. The next phase of AI may not be just about, who has the best model. It's going to be about who could build the physical backbone fast enough. So here's the watch list framework I'm using. For cooling and data centers, Vertiv is the cleanest name on my radar. For electrical infrastructure, I'm watching Eaton, GE Vernova, and Quanta Services. For power generation, I'm watching Constellation Energy and Vistra. For memory and DRAM, I'm watching Micron and the DRAM ETF. For networking, it's Arista and Broadcom. And for the broader basket approach, the AIPO ETF is one I'm researching, and in fact, I do own it. But again, these are not buy recommendations. This is a research map. The point is to understand which companies are tied to the bottlenecks behind AI. So this is how I'm thinking about the bull case and the risk case. The bullish signals would be things like AI CapEx spending staying strong, the data center demand continuing to rise, memory pricing staying firm, the network demand accelerating, and the infrastructure companies raising guidance. But there are some caution signals too. Power access can become a roadblock. Cooling and water constraints can get worse. Memory pricing can roll over. Hyperscalers capex can slow down. And eventually AI spending has to produce real returns. That's the key. The boom can be real and still face bottlenecks. So as an investor, you need to be able to hold both of these ideas at the same time when you're doing your research and due diligence. So my takeaway is this. I'm not saying AI is dead. I'm not saying the next phase of AI may be one or slowed by infrastructure. Power, cooling, memory, networking, data centers. The real question is not who makes the best chip. The real question is who helps AI actually scale. That's where I'm watching. And as always, this content is for educational and information purposes only, guys and girls. This is not financial advice. This is not a recommendation to buy, sell, or trade any equity ETF or investment strategy. Do your own research. Consider speaking with a licensed financial professional before you make investment decisions, and visit Practical Investing at practicalinvesting.com, and you'll have a lot of cool resources, free stuff, and things that you can enjoy there. So again, practicalinvesting.com. Thanks for watching. See you next time. Drop a like, subscribe. You know the deal. I appreciate you all. Take care.